Regulators are turning up the heat on the energy sector. The UK's Financial Services Authority and the energy regulator Ofgem are investigating claims by the price reporting agency ICIS Heron that traders manipulated the wholesale gas market.
Essentially what the FSA is looking at is whether a bunch of traders in the gas markets were either lying to the price setting agency about the trades they had done, or whether they had basically entered into trades at below the market price to artificially depress the price. The reason you would do that is that you have a derivative elsewhere that you would make big money on if the price came down.
Any attempt to manipulate the rate downwards wouldn't result in higher retail gas prices. But the allegations that traders manipulated wholesale prices to make money on derivatives will raise questions over whether consumer prices accurately reflect the price of the commodity.
Regulators are very, very sensitive to any suggestion that these kind of markets are being manipulated in any way, partly because so much rides on them. I mean, obviously we know that with LIBOR. In this case, the retail bills of millions of people in the UK are affected by what the wholesale gas price is. So there are tremendous ramifications here, and it's obviously in everybody's interest, including the regulators, to make sure this is cleared up as quickly as possible.
This investigation comes just days after US regulators threatened Barclays with fines of $470 million. The bank was alleged to have manipulated the California energy markets between 2006 and 2008. JP Morgan Chase, meanwhile, has just been accused of filing false information to regulators and will be banned from trading electricity at market rates for 6 months. And the global probe into market benchmarks that began with the LIBOR scandal seems set to only increase in the light of this latest investigation.
Barclays allegedly submitted false bids into a price-setting agency again, which was the British Bankers Association's process. And at that time, regulators, particularly Martin Wheatley of the FSA, said they were going to look not only at LIBOR itself, but at the whole question of benchmarks in both interest rates and in various physical commodities for potential for manipulation and to see whether they should regulate them more closely. What's weird about benchmarks, is what nobody's really thought about is, up to now, is that most of them are incredibly important for the financial markets, but the actual benchmark is a private process, and it isn't really closely regulated.
But is that all about to change in the wake of this latest price-fixing probe?
Well, clearly LIBOR is changing. The UK is going to regulate it. In all probability, regulators around the globe will do the same for other kinds of banking rates. It's less clear exactly what will happen in the energy markets and for gold and things like that. There is this big review, again, by IOSCO looking at benchmarks, and I think their plan is to sort of set forward as this is the best practice for benchmarks. You regulators around the world decide whether the ones in your jurisdiction need more intervention.
The UK's big 6 energy providers all deny their traders are implicated in this investigation. But consumers will be watching this closely, and there's likely to be public anger that the market is open to manipulation at a time when gas prices are rising.
There is a lot of scrutiny now of the price reporting agencies like ICIS Heron. The way they establish prices is rather sort of peculiar if you start scratching the surface, ringing round traders in a sort of half an hour window at the end of the day and trying to get what the quotes are and trying to establish what the gas price of that day is. Global oil benchmarks like Brent are often priced in a similar way. The benchmarks are kind of set by these price reporting agencies. So I think all of that, the way prices are established in the industry, is now going to come under increasing scrutiny.
If you believe the view of many consumer folks that banks and traders are fundamentally corrupt, then there will be lots and lots of cases. Who knows? I mean, this is certainly an area that has operated in the shadows and not had a lot of light shown on it. And if you sort of assume the basic idea that when you lift up rocks you find bugs, there's probably got to be more.
Energy Secretary Ed Davey has promised tough action if the allegations turn out to be true, and the probe could lead to calls for tougher government regulation of price reporting agencies. Daniel Garrahan, Financial Times, London.